Africa and emerging markets are still under pressure due to the global slowdown. Maurice Madiba, he's a founding director of Cloud Atlas Investing, and Oliver Bingingo, the co-founder and director of AfriWise, joins me at the desk to look at what's ahead. Of course, a little bit later on, we'll be bringing our colleagues in from the east and the west of the continent. Maurice, maybe let me start with you, because in our earlier conversation, we're talking about the all-important non-farm payroll numbers out of the US, and the fact that they're a good indicator as to whether or not we'll be seeing the US Federal Reserve increasing interest rates. Yeah. Where does that leave Africa? We have to obviously make a couple of changes in our monetary policy stance, but where does that leave Africa and emerging markets? And in the context of slower growth, what now for us?
Yeah. Thanks for having me on the show. So if you're looking at the Fed now, the market hasn't fully priced in the Fed hiking rates this year. I think the news that came out of America recently, where the Fed took a bit of a dovish approach, saw emerging market currencies start to rally against the dollar. And now you're going to see the Fed, if these numbers are good, have reason to increase interest rate for their bonds. The reason being they'll have a bit of inflationary pressure, which around the world is a bit of a rare commodity at this particular point, especially in the developed world. And so if America faces that, they're most likely going to increase those rates as early as June, if the numbers are good and beat expectations. Whereas if the numbers aren't as good, we'll still see a bit of a rally in emerging market currencies.
Oliver, let me bring you into this conversation, but I know that you have a specific interest in SMEs. We've been looking at the corporate earnings coming through from, from the US. These are the big guys, seeing how they're doing in terms of their earnings. But the SMEs here on the African continent and other emerging markets, again, in this context, where we're looking at slower growth, where there's a little bit of uncertainty, how are they adapting to what's currently happening now?
Yeah, well, I think lots of focus has been on commodities, despite the fact that the diversification rhetoric has been present for the last decade or so, and that played into the positive story of the African continent and African growth. But I feel that the SMEs, to some extent, have been left behind, and the SMEs, well, that's globally, that's not just in African countries, are the source of significant job creation. And where you see, and maybe we'll go there a bit later as well, where you see where African growth or the source of African growth will to a large extent come from the demographics and the young populations moving into urban centers. Yes. Obviously, those young populations need to find employment, because whereas young populations are an asset and a potential for growth, they can obviously also be a liability or a potential threat if those people are not getting employed. And that's where I think from the SMEs that lead to job creation need to get more attention from governments. And one example obviously is around legal frameworks, where today SMEs that don't have the same financial muscle and internal resources are faced with the same, very often the same legal frameworks and compliance requirements than big companies. So I think there's a big focus on SMEs to be had now to prepare for growth going forward.
Speaking of growth, George Indirangu is joining us now from the east of the continent. George, I know that you're eager to get into this conversation. Oliver and I was just talking about the fact that SMEs are incredibly important in all of this, and Maurice was giving his take on the importance of global growth and where this leaves emerging markets and Africa. I'm sure you've got a question to pose to either of the gentlemen.
All right, my question goes to Maurice. This is George from Kigali. Now, we've just had a conversation with the Executive Director of the Capital Markets Authority, who mentioned that over the period of last year, we saw only one listing on the stock exchange through the entire region. Now, the markets have been set up, the infrastructure has been put up, but the business community is not responsive. How do we work out this narrative?
Okay, well, the one thing investors look for is good governance when it comes to listing companies. So you will look that a lot of people are looking for exposure in the listed African equity space. The only problem is that the governance is not quite where it should be. So recently in Ghana, the Ghana Agricultural Development Bank had an IPO in March. It's still to come to market, but there is a lot of positivity around that, and that IPO was 4 times oversubscribed. So it does show you that people do want to get into that space. but a lot of African companies need to come to the fore, start to list as opposed to operating in the unlisted space. And then you also need to have quite good governance that these exchanges offer the companies and investors.
So still with me at the desk is Maurice Madiba, founding director of Cloud Atlas Investing, and Olivier Binyingo, who is the co-founder and director of AfriWise. George, I'm going to hand straight through back to you. I know that you've got a question for Olivier.
Yes, Olivier, I have a question on what we're expecting next week, which is the World Economic Forum happening here in Kigali. We are talking about bolstering economies, but we need to start with the priority sectors. Kenya, in particular, has just mentioned that it could be the #1 exporter for flowers in the entire world, leave alone the continent, in not so long. So how do we work out this conversation to ensure that we know what priority sectors to focus on moving forward?
Well, I think everything remains a priority sector. I think there's lots of new sectors coming in, and I think the technological environment obviously is one of those where African countries need to make sure that they are not just consumers of those products of this technological economy, but also actors and developers of such economy. But that being said, the more traditional sectors, and obviously you're looking at commodities, you're looking at mining, oil and gas, agriculture, remain relevant, and especially when prices will start going up again, because we know that those things work in cycles, and they will start going up again. I don't think they should be written off completely. Obviously, there needs to be, and that's from a government's perspective as much as from a private perspective, you need to look 20, 30 years ahead and kind of assess where this economy is going and where the African economies can play. And in that respect, I think focus on education remains key. Because when we speak about technology coming in and when we speak about fourth industrial revolution, we know that the skills around solving complex issues will become more and more important and more in demand, whereas certain of the other skills where maybe today certain economies are betting on in terms of growing economies will become more and more automated. So we have to, through education, obviously prepare our African countries for the economies of the future.
Maurice, so let's bring back the discussion back here. And I know that you've been very concerned about where Africa's growth is going to come from. And of course, digital transformation has been said to be one of those things that can be used to leapfrog Africa's growth. But, you know, as Olivier was just stating, we've got, you know, we're looking at education levels that are incredibly low, and also we've got the lack of income generation. How do we balance those factors with you know, issues such as industrialization and digitization? You know, how do we get that balance right?
Yeah. It stems from the top going down. Governments really need to now start investing in the African consumer, investing in the building of African consumption, and also inter-regional African trade. So that means you're not only starting to build cities that absorb a lot of people and you don't have employment for those people, but you're smart about the urbanization that's going to take place. You create a market for some of the less educated or even people in the rurals, a market for their produce to be consumed within the domestic economy. And so there needs to be a lot more focus on the internal as opposed to the external. As you know, Kenya becomes one of the world's biggest flower exporters. Kenya can also develop an app where people can buy flowers domestically and also transport them, creating jobs using technology. So there is quite a huge offering that technology does bring to Africa, but it also must be geared towards services. It must be geared towards the consumer so that the access to these goods becomes easy for both you and I.
George?
All right, now, Maurice, we know sometimes our economies here are becoming slightly predictable. We know when the inflation will hit. We know when the commodity prices will affect us more drastically. How don't we understand when to work out our reserves in preparation for this?
Yeah, so, you know, it's very interesting to look at the cycle because you might suggest that the time period is known in terms of when it's an upward cycle or it's a downward cycle, but to be honest, it's a little bit unpredictable. If you look at some of the commodity cycles, for example, with oil. Typically, oil has a downward cycle for about 2 years. So 2 years is the size of the storm or the length of the storm. If you look, this oil crisis started in 2014, we're now in 2016. So if the oil price doesn't pick up now, we're in a bit of a bad space, especially for oil exporting countries. So being able to time when the inflation starts to increase, when commodities dip, is unpredictable for governments, but being able to know the length and have that fiscal strength or fiscal discipline over the 2 years to maybe cut spending, focus on internal investment, and reduce maybe current account deficits to the extent that it's possible. They have to know that they have 2 years to do that. And if it becomes extended, so say oil doesn't recover this year, then it will be the first time in the history of the oil price that it's taken 3 years to recover.
Gentlemen, unfortunately, we do have to leave it at that, but thank you so much for joining us today. A very big thank you to my guests, Maurice Madiba, Founding Director of Cloud Atlas Investing, and Olivier Binyingo, Co-founder and Director of AfriWise.